So next is handling inflation. Capital budgeting, okay, involves estimation of cash flows over few years ahead. For example, in next few years, you cannot assume there's no inflation. Okay, inflation is happening. You cannot ignore it. If for 5 years, 3 years, 4 years time, you have such a long period of time, you have to consider the inflation in your calculation. Otherwise, it doesn't make any sense. Okay, two methods. When you are handling inflation, two methods that you can adopt. First, to discount the money cash flows with money cost of capital. Here's the money cost, money cash flow, okay, or discount the real cash flows with real cost of capital. I use different font size, okay, but since I would like to highlight discount money cash flows with money cost of capital is generally accepted in the examination. So remember, if you seen the questions asking you about the calculation of cash NPV, they provide you with different discount rate. Okay, what the first one is the money rate, the other is the real rate. Then okay, please adopt the money rate. Okay, that is an illustration asking the students to calculate the money cash flow and money cost of capital. The NPV are based on the money cash flow and money cost of capital, or the NPV using real cash flow and real cost of capital. So you have the time to read it through. Okay, you can pause now, and then you can play back when you finish the reading. Okay, welcome back. Okay, here the questions is asking you help you to understand what is the money rate, what is the real rate. Okay. So the inflation figures is here, 5% per annum. Okay, 5% per annum over next 2 years. Okay, and the money rate is 15.5% of return. Here's the cash flow pattern. Okay. Before we go into real rates, we go to the money market rate first. Okay, the discount factor is 15.5%, right? Okay, so the cash flow in first year okay. First for initial investment is 1,000, and then cash flow is 800 and 600. And how to, in the examination hall, you are given the discount factor table. How can you get 15.5% discount rate? Okay, my methodology is simple. To just take the simple average between 15 and 16%. For example, in the first year, you get, okay, here the first year, 15% is 0.57 and 16% is 0.862. Okay. So sum these two numbers together and divide it by 2. So you get 0.866. Okay. And for the second year, use the same method. I get okay. So the NPV, or the present value, okay, here is my calculation, because when in the course notes, okay, it shows the detailed rounding, but if you ask me, okay, I would like to share with you, okay, in the practical approach, okay, when you go to exam hall, you base on the discount factor table, then you take this approach. It comes to very similar numbers that you don't, I don't think you need to worry, because you cannot, for example, bring a very scientific calculator. Okay, I suggest you to base on the materials provided by the ACCA authority. Okay, because all these numbers are can be referred. So the NPV for based on the money market rate is 143. Okay. Is the money market rate. Okay. So next is based to find the real discount rate for real cash flow. If 15.5% is the money market rate and inflation is 5%, okay, then what's the real rate? Okay, there's a Fisher formula in which it's telling you that the money rate, which is I is money rate, okay, is equal to the real rate times the inflation. R is the real rate and H is inflation rate. Okay, you can check with your formula sheet. Okay, you can find this Fisher formula. So given the money rate is 15.5%, and you have to find the real rate R given inflation is 5%. So solve this formula, you can find H, which is, let me check. Okay, H should be 10%, right? H should be 10%. So by using 10% to discount all real cash flow, remember, all real cash flow. So you have to convert the money cash flow into real cash flow. The real rate Okay, we drop down all money cash here. Okay, how to get the real cash? How to get the real cash? Okay, for 800, okay, just simple, divide by 5%, 1 plus 5%, it should be 762. And for second year, is 544. Okay, here is okay, or you find the discount factor for 5%. Okay, it gives the same. So you get the real cash flow and discount factor at 10%. So initial investment is 1, and then is 909, and okay, X62X26, you get the PV. So 762 times 909 is 693, and 544 times 0.826, which is 449. So altogether, you sum them up, 142. Okay. Only $1 difference is the rounding. I think it's fine. So you can see for the real rate, okay, you found 142 or 143, which is very similar to what we did in the money market rate at 15.5%. So this illustration sharing with you that to remember to discount the cash flow if you adopt the money market rate 15.5%. Okay, you no need to convert all cash flow into real terms just based on the money rate terms. But if you would like to do, or the question is asking you to use the real rate to discount, then please remember you have to convert all money cash based on the inflation rate to the real cash flow. Okay, and then discount by the real rate 10% to come to the present value. But they should be you should get the same numbers. You should get the same numbers. No worry about which rate that you have to adopt. Good. Okay. So next, handling tax.